All right, today we're going to break down, step by step, the investment thesis for a junior mining company called First Canadian Graphite. Now, this is a story about a really critical mineral, a deposit that could be world-class, and of course, the high-stakes gamble that comes with early-stage exploration.
And it all starts right here, with this stuff. This is graphite. You know, it's the single biggest component in an electric vehicle battery by weight. And believe me, North America is desperately trying to build its own supply chain, one that's not dependent on China. That huge demand, that's the whole backdrop for what we're talking about today.
So here's our game plan. First, we'll get into the core investment idea. Then we'll build up the optimistic side, the bull case, by looking at the asset itself and the numbers behind it. After that, we're going to get tough and look at the bear case, all the risks involved. And finally, we'll wrap it all up with the decision an investor has to make.
Okay, let's dive right in. At its heart, the investment thesis here is a pretty straightforward, high-risk, high-reward bet. We're not talking about some complex new technology or a company with steady cash flow. This is all about potential.
And this quote from private investor Ian Castle really nails it. The idea is speculative for sure, but it's simple. The bet is that this company has an asset that's so good it can get into production really fast, and this is the key part, without needing $1 billion to get started. It's a bet on speed and low cost.
So the big question is the asset really that good? Let's build the bull case and take a look at the rocks themselves. The Berkwood Graphite project up in Quebec, Canada. This one number, this is the most important part of the whole bull case, 17%. That's the average grade of graphitic carbon in their resource. Now, to put that 17% in context, and this is what's so wild, it isn't just good, it's exceptional. I mean, most graphite projects in the entire world are working with grades somewhere between 1 and 5%. This asset is playing a totally different ballgame.
And this picture shows you why that high grade could mean low costs. The graphite isn't buried a mile underground. It's right there, at the surface, in what miners call outcrops. That means you don't need expensive, complicated tunnels. You could, potentially, just scoop it up with a relatively cheap open-pit mine.
But look, a great deposit is worthless if it's stuck in the middle of nowhere, right? Well, this project has some huge advantages. It's in Quebec, which is a fantastic place to build a mine. It's literally right next door to another massive project, which helps prove out the area's geology. And maybe most importantly, all the infrastructure is there. Roads, a nearby port, and access to cheap, clean hydropower.
Okay, so the asset itself looks great on paper. But when you're talking about a tiny company like this, the financial structure is just as critical. Let's see how the numbers back up the bull case.
This is so important. The company has what we call a tight share structure, not a ton of shares out there. That means any good news can have a really big impact on the stock price. The valuation is still very low, and here's the kicker. Insiders own about half the company. They have serious skin in the game, right there with the other shareholders.
So these are the basic numbers from the project's official technical report. The engineers are assuming super low mining and processing costs, which makes sense given the high grade and the fact that it's at surface. And check out that cutoff grade, over 6%. That means they only plan on touching rock that's already a higher grade than what many entire mines are built on.
And the company is not sitting still. They're fully funded for a very busy 2026. They've already done some early survey work and have a major drill program planned for this spring to try and make this deposit a lot bigger. But the main event, the big one, is at the end of the year, the Preliminary Economic Assessment, or PEA. That's the first time we'll see an official economic value attached to this project.
So far, it all sounds pretty compelling, right? Maybe a little too compelling. An investment thesis is only as strong as its weakest link. So now we have to get serious and really look at everything that could go wrong. Before anyone even thinks about an investment like this, you have to ask this exact question, the hard question. What could go so wrong that it destroys the value here and potentially sends the stock to zero?
We flagged 5 major risks. There's a financial issue with warrants, a geology risk that the deposit's just too small, a technical risk with the processing, a huge social risk with First Nations agreements, and then, of course, the market risk. What if graphite prices crash?
Let's start with that social risk, because it is a big deal. And hey, this isn't just our opinion. This is a direct quote from the company's own report. It says, flat out, there is a moderate risk in reaching an agreement with the Pessamit Innu Band. The project is on their traditional land, and without their support, there's no mine, period. Next up, the geology risk. Yeah, the grade is amazing, but the size of the deposit right now is just over 3 million tons. Honestly, that's just not big enough to get a major company interested or to justify building a huge long-life mine. Absolutely everything is riding on that drill program this year, proving this thing is way, way bigger. And finally, we have to talk about the financial risk. See, besides the regular shares, there are almost 23 million warrants out there, and most of them can be exercised at 50 cents. So if good news sends the stock over 50 cents, all those warrant holders can buy shares at 50 cents and immediately sell them on the market for a quick profit. This creates what investors call a wall of selling that can kill any momentum, no matter how great the news is.
Okay, we've seen the very powerful bull case, and we've stared the very real bear case right in the face. So let's bring it all together and frame the final decision that an investor has to make here.
I think these images do a great job of grounding us in reality. This isn't some software company in an office. This is tough, remote, difficult work. It's drilling holes in the ground and hoping you find something valuable. It is, by its very nature, a high-risk, speculative game. And this really boils it all down. You've got the two sides of the coin, right here. The bull case is simple and powerful. Incredible grade, great location, and they've got the money to prove it up this year. But the bear case is just as clear. It might not be big enough, the stock structure could hold it back, and those huge technical and social risks are still question marks. Which really leaves us with this one last question. Is this a binary bet? Is it an investment that could either deliver a massive asymmetric reward where your potential gain is many, many times your potential loss, or is it just a total risk, a gamble that could go to zero if any one of those big hurdles proves too high to clear? That's the decision on the table.